Hello guys, welcome back to yet another lesson, and in today's episode I want us we get to look into how you can get to maneuver or even get to face this fear of missing out. It's normally known as Fomo, and this normally happens whenever you get to see the market has some volatility, and of course as a human being you might feel like you are left out and you have missed that opportunity, especially if you have done you had done your analysis earlier and you're waiting for something specific to happen. And I'll be showing you a few scenarios whereby it's normal for you as a trader to feel like you have missed the opportunity, and how you can get to tackle that so that to avoid facing the same in future. But before you get into that, if you're new to the channel, just go ahead and make sure you hit the subscribe button so that you be part of this team, and of course you keep receiving this kind of lessons so that we can get to grow our forex trading skill, and of course we can get to help each other become a better person. And of course, if you have been following along, I've been trading one currency pair, which is GBP JPY, and just to clarify for those people who have been asking me whether how much do I normally trade, I have a funded account. I have a $10,000 funded account. I'll be showing you for proof purposes, but to show you that whatever I get to teach in this channel is something that I get to apply real time into the market. So for that case, just allow me to share my screen recording so that we can get to look together on these different scenarios of avoiding FOMO. Well, to start with, I want you to go to your trading view. That's where I normally do my analysis, and I normally prefer to use a couple of brokers. We have I normally use my analysis. I normally go with Pepperstone. You can see my trading view at the charts I'm looking into. They are of course they are run or they are managed by Pepperstone, and I'll be looking into recently what happened, that is either on Thursday or Friday this week, that is the end of this week, so that I can get to show you a couple of scenarios. Remember, if you have watched one of my videos I did on how you can get to trade with trend lines, trend lines is one of the most reliable strategies that you can get to put in place, and they really help you to know where you anticipate the market to go to. And of course, remember, in everything that you get to do, always trade with the trend. So for this case, with GBP JPY, I normally know my trend on 4 hours time frame. In any scenario whereby we have the 4 hours time frame trend and the 1 hour time frame trend also lines with the 15 minutes trend, it really gives you confirmation that you're in the right track, and the possibilities of you getting a loss might be minimized to a very, very low number. But remember, we're in a very, very risky business, and of course risk management has to be put in place. So for this case, you can see right here we have GBP JPY, and the lines that you're seeing running from the left side to the right side, these are called psychological levels. And the importance of psychological level, if you get to zoom out the market, you can see the market always reacts to these regions, and you can get to consider them to be a support or even resistance zone. So first of all is to draw the psychological levels into your market, into your charts, of course. And of course, I normally use a 50 moving average to determine my trend. So if I get to move to 4 hours time frame, I can show you a couple of scenarios whereby for this case we'll be looking for, you can see for the 4 hours time frame the market is on a downtrend. So we'll be looking, I'm saying it's on a downtrend because you can see it's making new lower lows, and of course it's not making any new highs, and of course the market is below it's below the 50 that is moving average. So from there, another scenario whereby you can get to look into, you can also get to look at the candlestick formations. If you get to look closely, you can see the market is forming large red candles, meaning we have more sellers as compared to the buyers. The buyers, they are really struggling, but for this case, generally, to be on the safe side, we should be looking for selling opportunities heading downwards. So if you get to move to 1 hour time frame, you can see the market right here is showing as a possibility of the market to change the trend, but since the higher time frame is more stronger than the lower time frame, we should be looking for more scenarios to the selling opportunity. So let's head to the 15 minutes, and I want to show you how to avoid FOMO situation, meaning whereby you get to miss out or to feel like you're missing out on opportunity because maybe the market has already or has passed your entry zone. Like for instance, like for this case, if I go to draw the trend line here, for instance, I came here and I got to draw the trend line right here. You can see I should be looking for a couple of scenarios here. Sorry for that, guys. So for this situation, if you're looking more of remember at the 4 hours time frame, we are looking more of selling opportunities. And if I had come to the market and I managed to draw this trend line, you can see the market has touched three times. That is scenario 1 here. We have this situation here. Sorry for that. Let me just drag this one to this point. And you can see the market has touched this trend line 3 times. In most scenarios, if the trend is not that strong, we normally anticipate the market to touch a trend line, that is to touch a trend line 3 times before the 4th time the market can get to cross, and of course we anticipate for that is for a retest, and then the market can continue with the same trend. So here's the thing, you can see if I got to if I was looking for the market to break this trend line, and then this one happens, a scenario like this one happened. So basically what I'll be looking for before this long candlestick was formed here, I could be looking for a situation like that. Of course, I get to place my stop loss. I normally place my stop loss to be around 30 pips like that. So for this scenario, I could be looking for the next psychological level, or even the next lower low. That could be amazing one, could be a good one. Since I normally look for a minimum of 2:1 risk to reward ratio each and every single time. So for this case, I could be looking for an opportunity like this one, but unfortunately we have the formation of this long candle, and you could feel like a situation whereby you have already missed your entry position. Don't worry, guys, because the same situation that happens here, you see the market it has to touch the trend line 3 times. That's the same scenario that will be happening on this other side. So if you get to see this, just be patient enough, and of course get to wait for the market to give out another second entry. So we see you missed out first entry here. After the first we had this engulfing bearish candle. You just wait for the second opportunity to happen here, and you could have for this case you could have waited for a scenario like this one. Let me just place it here. Like I normally look for 30 pips stop loss, and of course we get to focus into of course we are looking into that situation like that one. So you see, if you get to move this one around here, you could have waited for the for this candlestick for the second entry to happen. And for that case, if you get to draw a trend line here, let me quickly draw a trend line in a scenario like from there to around there. You can see the market. Let me just draw sorry for that. Let me just draw the trend line around here. You can see the market always touches the trend line at least 3 times before it can get to break the 4th time, and of course you get to look for a reason to enter for that market, and of course always trade with the trend. And for that case, you can say so I could have looked for an opportunity to sell around there after the market had given out the second entry position, and you can see I could have easily managed to get 1.6:1 that is the reward to risk ratio. So don't always have that fear that the market has already left you behind. Make sure, guys, that you get to look for at least 3 positions that you see the market has touched the trend line, and then once you get to see the third one, be cautious because it might not have the 4th one, and for that case the market might break and of course get to move into the other direction. This is a scenario that happens each and every single time. If I get to draw another scenario here, you have this one here. You can see the market like for instance, you can see the market touched. This is 1, 2, 3, and of course the 4th time you can see the market got to break, and of course that's where you can see the market was showing so much momentum going on the downside. So what I'm saying is that I always look for these opportunities. The market gets to touch 3 times, and of course if it has already touched 3 times, don't look for the 4th time, because we're anticipating the market might break to going the other direction. So basically that's what you need to look into each and every single time to avoid this problem of FOMO, that is fear of missing out. That is for today, guys, and of course I'll be looking forward to seeing you